Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here on Share Talk for Sunday, the 24th of January. Starting off with Angus Energy, where quite a good technical setup here. We had that final dip towards 0.6 pence last month. Current situation is that we're just actually had a golden cross signal between the 50-day and 200-day moving averages, just breaking or closing above the intraday high of January to date at 1.18, so that's another plus. And the view here is that above recent neckline resistance at 1.1 pence, we could hit that resistance line projection from December December 2019, in fact, at 1.8 pence, hopefully by the end of next month. Good stuff from Bidstack at the moment. It's always good to see a stock which has been hit by the bears rise sharply, and this looks like it's rising very sharply with this V-shaped bull flag or handle, as some might call it, off a cup and handle formation. So very strong setup indeed. 13.7 pence was the initial January resistance, and an end of day close above that and above that resistance line from April last year. And we could see the stock pushing higher quite strongly. Just how high we could fly is suggested perhaps by this line of resistance from December 2019. As high as 25 pence. And the way things are going with the strength of the setup, that could be seen by the end of next month. At this stage, only back below recent support around the 10 pence level, really delaying the upside scenario, but it would be quite surprising for that to break after all the work that's been done at the moment. The other point to note, I suppose, in terms of just a general charting point, is the way that we had that gap higher through the middle of September through the initial December, the initial December resistance there at 6.3 pence. It was a failed gap fill, and that's why and that's how the shares have managed to spike up so well since then. Another stock where there's been a gap higher is coming up next, Castillo Copper, and here we've got a situation where there was a massive gap earlier in the month through the previous resistance there at 3.2 pence. While we have the shares above that, and especially while we have the gap unfilled down from the 2.75 pence area, we're looking for considerable higher prices, hopefully up towards that line of resistance from August as high as 5.75 pence by the end of next month. If you're cautious on the shares, you probably wait for an end of day close above recent neckline resistance at 4 pence, which is obviously not too far away at the moment. On to a stock which I've covered quite a few times of late and seems to be finally starting to accelerate to the upside, Galileo Resources. We broke the initial January resistance at 2.1 pence. Above that, the initial target here up to the top of the rising trend channel from back in, when was that? Back in the early part of last year, so February last year, up to 2.9 pence, hopefully over the next 2 to 4 weeks. Break of 2.9 pence would give us the best case scenario target, which is a March resistance line projection from last year as high as 6 pence over the next 2 to 3 months. Stop loss at the moment back below the 20-day moving average at 1.79, but ideally there's no sustained price action back below 2.1 pence ahead of the move to the upside. Seeing quite a few people singing the praises of global petroleum on a fundamental basis, but in fact even on a technical basis as well. But what we're waiting for here probably is a clearance of the initial January resistance at 1.47 pence. That would be nice. If you're not already long, you could have gone long on the basis of the break of the 200-day line at 1.01 pence earlier in the month, but 1.47 the next level to break. After that, hopefully we would hit the July resistance line projection and July resistance itself at 1.8 pence over the next couple of weeks, or a couple of weeks after breaking 1.47. And the big target here over the next 2 to 3 months, the top of a broadening triangle from the end of 2018 as high as 3.5 pence. But upside certainly valid while we hold above the 200-day average, just above 1 penny. Iron Ridge is the next stock here, and probably the strongest looking of everything that we're looking at today. The reason for saying that is that we had gap through resistance. We didn't fill the gap, so it's a failed gap fill, which is a really positive sign. And we closed the week on a new high for January, so that was pretty impressive. The view here is that the longer we remain above 20 pence, which is post-August resistance, the greater the chance of a top of August 2019 price channel target as high as 47 pence. That could be seen as soon as the end of next month, given how strong the current position looks. Chromec is next. I think I've covered the stock before, but not as let's say aggressively as maybe the shares deserved. Here we've got a situation where the shares basically snapped higher through the 50-day line early in the first week of January, breaking the previous 13 pence peak from December. So that was the highlight of or highlighting that the shares were on their way. In the meantime, we've got a rising trend channel from the end of November, and above the floor of the channel on Friday's low at 17 pence. We're looking for 35 pence at the November price channel top to be hit by the end of next month, which would be a decent return for traders. This stage only really back below 15 pence, really delaying the upside scenario, but ideally we remain above 17 pence on Chromec. Metals exploration, another sort of gap set up here. We had the gap in the middle of the month through the initial January resistance at 2.14 pence, and the longer we remain above that resistance and the gap, at the floor of the gap there at 1.87, the greater the chance of a move towards the top of the rising trend channel from November 2019, currently promising a target as high as 4 pence, perhaps even a bit more actually. The could draw the top of the line there up to 4.5 pence. If you are cautious of the stock and not already in it, then maybe you'd wait for a break of 2.65, which was the January peak to date. One of the setups that I'd forgotten about of late, which was highlighted by the move at Ridgecrest, was bear traps off the bottom of the range, and here we've had that at Microsaic. We've also had an exhaustion gap fill as well over the course of January, so filling the gap up to 0.4 pence. What the bulls are looking for now will be an end of day close above 0.4 pence, which is the January resistance to date. If we can get that, then we would be looking at the top of a broadening triangle from May last year as high as 1.3 pence to be hit by over the next, by the end of March, hopefully would be the time frame on that, once we get a decent end of day close through 0.4 pence. The moment the stop loss back below 0.2 would be probably the best area on the money management side. Going on to mobile streams, which was in the news last week. Here we've got a situation where we've had a key reversal to the upside like Ridgecrest and off the lows as well, breaking that 50-day moving average at 0.24 and also breaking that October resistance line. So looking pretty sharp for the bulls at the moment. If you're fussy, you might want to wait for an end of day close above the January resistance and the 200-day line at 0.26, but otherwise it looks as though enough has been done here to get the shares on their way towards a possible top of April 2020 price channel target at 0.6 pence to be hit as soon as the end of March. So above 0.2, looking for as high as 0.6 pence at mobile streams. A bit of a dark horse coming up next, Marichal Capital. It's been there or thereabouts in terms of being a basing candidate, but looks like this month, with the gap through the 50-day moving average and then breaking that December resistance at 1.25 pence, we're finally on our way. Above 1.25 pence, looking for as high as 2.5 pence, which is the top of a rising trend channel from the end of 2019. So hopefully Marichal already on its way, the ultra overbought RSI notwithstanding. Obviously we had the full storm in August, September. But this looks a little bit better than that in terms of the configuration, with the 50 and 200-day moving averages both rising in sync at the moment. Let's see if it'll happen this time. Finishing off with the stock, which is not normally in this kind of penny stock review, but we've got Money Supermarket here. Potential breakout with the September resistance line there at £2.75. The highlight, I suppose, in terms of the trigger on going long potentially is the way that we've gapped higher and held the gap so far. The bottom of the gap there at 265, so above 265, definitely a situation to watch in terms of a possible breakout through 275, and the stop loss back at £2.59, which is the 50-day moving average. The target, £3.20, while we hold above the 50-day line. That's it from me today. More updates during the week.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.